available. So we're here today to start the workshop. So I guess I'm just going to turn it over to the accountants and let them have at it. Unless you got something to say, Susan.
Yes, Mayor Pro Tem. We have two gentlemen here today that have been working with us since almost February, March, and they've come in and done a very thorough job, and wanted to. I know they've met with each of you and given you some updates, but they also wanted to give just an update, and you guys be able to ask any questions, collectively today. And so I'm going to turn it over to, this is Zach Califor and Wayne Durrett, and they are from James Moore. So we're going to turn it over to them.
All right, thank you, Vicki. Just
You're probably going to have to hold it.
Okay. All right, there we go. All right, good morning. Zach Califor, partner, James Moore and Company. Great to see you all again. Thank you, everyone, for taking the time to meet to go over in a lot more detail than we're going to cover this morning, although we still will take a pretty thorough look through the results of the audit for the September 30th, 2019 fiscal year. First and foremost, would like to thank the Commission for the opportunity to work with the city, as this, of course, was our first year serving as your external auditors. Big thank you as well to staff, Kiki, and the finance team for all of their hard work. As I know I commented yesterday a little bit, just looking at everything that's really transpired for the city the last 20 or so months, looking at where we were getting started, kind of our first week that we came out here was in mid-March when basically the country was shutting down related to COVID-19. We pulled out of the field early, looking at everything that transpired, adding in COVID-19. I would have basically told you 3 months ago there was no way that this audit would be complete and being reported on time to meet the June 30th deadline with the state and federal government. So big kudos to your team as well for all of their hard work to help make that happen, despite the normal growing pains of changing auditors, some personnel changes at the city side, just so many circumstances that in a normal world would work against having any shot of having the audit done on a timely basis. So what I'm going to do first is take a walk through the different audit reports that we have in these financial statements. The financial statements in total are about 80 some odd pages, and these are the city's financial statements. We issue 5 reports as part of the audit that express the results of that audit in line with those financial statements. So the first report is the audit report on the financial statements themselves. And this is the traditional audit report you would see in any environment, whether it's a government, public company, private company. And here we did issue an unmodified opinion that the city's financial statements are fairly presented in all material respects. Basically what this means is that the numbers as they are presented can be relied upon for decision-making, budgetary purposes, and otherwise. The other reports that we issue relate really more so to the results of the audit from an internal control and compliance perspective. We have 4 reports that we issue, and really the results of those reports are summarized in the schedule of findings and question costs. That's on page 70 of the document. This goes through first related to internal control over financial reporting, and then on the grant compliance side in terms of any internal control matters that came to our attention with regard to the controls that were either in place or the functioning of those controls during the fiscal year ended September 30th, 2019. So again, before we get into those comments, just a reminder that again, this is looking at the 2019 fiscal year. So many of these items have already been addressed, corrective action has been taken or otherwise. And before I get in, I will note that at the very back of the document on page 85, there is what's called management's response to findings. And that, in effect, takes a current look as of today from staff in terms of what has been done to address some of those areas that were problem areas during 2019 or that we've identified during the audit. I will walk through all of those briefly in detail. So first, on the financial statement side, with regard to internal control over financial reporting, we did have 6 comments in this report. 5 were classified as material weaknesses, which is really the most pervasive or significant type of comment we could issue. And then we had 1 comment that was classified as what's called a significant deficiency. On the material weakness side, the first comment that we had related to management override and segregation of duties. And this related to the various transactions in the aftermath of Hurricane Michael, where there was, of course, the fraud investigation that was going on after the fact in some areas where controls were not properly followed, and some where there was basically a limited segregation of duties where a former individual with the city had pretty much full authority to get some of those transactions processed. The second comment that we have relates to the timeliness of bank reconciliations. During the fiscal year, many months the bank accounts were not reconciled on a timely basis, which in effect there's an increased risk of issues not being caught, whether it's due to error, fraud, or anything else. If you're not reconciling those bank accounts, if there's something that should not be in there, it's not going to be identified first timely, and then potentially, if at all. For instance, in terms of the initial red flag on that, when we were talking with Kiki in February or March, whatever the time frame was, basically she was looking at and saying, yeah, I need to go and get that done, as she was kind of taking her initial inventory of the city's finances and the status of account balances after she started working with the city in late January. The third comment that we have relates to very similar audit adjustments and just reconciliation of account balances in general. Much like the bank accounts, when Kiki went through and did that inventory, many of the other balance sheet accounts of the city had not been reconciled like they should have on a regular basis, and she kind of had to go back and figure everything out, going back 5-6 months at that point in time. As part of that, there were also some adjustments from the original numbers. When Kiki generated that trial balance, shared that with us as well, and everything kind of evolved from there to get everything where it should be. So because we had those adjustments and those accounts were not reconciled timely, we did report with regard to that not taking place. And just like the bank account side, all balance sheet accounts should be reconciled on a timely basis, because again, if there is an error hitting one account, if you're not reconciling that on a regular basis, you're not going to find that error until you do, and potentially by the time months and months pass, it's that much harder to go through, reconcile, and find any discrepancies that there might be and find out what the cause is for those issues. The fourth comment that we have relates to let me make sure I got my numbers right. Okay, journal entry controls. What we noted during the year is in any key financial areas, you want to have key portions of that process or duties separated so the same individual does not have access to basically every step in a process. So to kind of give you a very general example, you would not want the same person to be opening the mail, processing invoices, adding vendors to your system, cutting checks and signing checks, because there would be basically no second set of eyes at those key steps in the process. On the journal entry side, which relates to manual entries or the ability to basically override and change what's in the general ledger, during the fiscal year, there were really no separations there where you had folks that were able to basically post a journal entry with no review or approval, and potentially, again, if there was anything that was erroneous, potentially fraudulent, or otherwise, that could easily go undetected because you don't have that second set of eyes. So from a process standpoint, that was one that we've talked with Kiki, and staff has already looked at improving that so that there is 2 sets of eyes on those.
Just a quick question on that. Most of these issues that were taking place, because the reason I say this, I know Kiki's a relatively new employee, were most of these issues, like with a lot of the books not being kept up to date and everything, that was previous to Kiki, correct?
Absolutely, yes. Yeah, this is looking at 2019, kind of the way that we structured our audit procedures, because normally in a normal world, so to speak, if let's say we were being engaged for the first time for the fiscal year 2020 audit, right now is about the time that you would want to have your auditor on board before the end of your fiscal year. We would kind of, while it's live, look at your internal controls in place during the fiscal year. So kind of what we did is we did this hybrid approach where we looked at what your procedures were today, so that if we had any issues or concerns, even though we aren't auditing 2020, we could still say, hey, here's something that you guys need to button up going forward, even with what you've changed. But we also had to look back at how was everything taking place during fiscal year 2019. So that's what's driving this comment for sure. The fifth comment that we have relates to purchasing policies. basically areas where those policies were not followed. Again, this comment largely relates to the fraud investigation and some transactions that took place in the aftermath of Hurricane Michael. So we are required to report that from the purchasing standpoint in terms of those procedures not always being consistently followed as they were written. The sixth comment that we have, this is now dropping down. So the first 5 that I've mentioned, those were all classified as material weaknesses. This comment now drops down to a lower level that's called a significant deficiency. And what this comment relates to is, as part of the audit, we have a certified information systems auditor on our team who has a much more deeper understanding of the IT environment as it relates to controls over financial reporting. So it's not looking at cybersecurity issues and otherwise, it's more what relates to the accounting process, who can access, who can post journal entries, as we talk about that as a key area of concern, and other areas like that. We had a series of recommendations that came out of that portion of the audit. There was a separate letter that we've provided to staff that details those. We met with Graham yesterday to review those findings, and pretty much most have either been addressed. It'll be a pretty simple fix going forward. So there's not anything major in terms of ongoing concern there. But just because it relates to IT, there's been so much attention given towards IT, information and cybersecurity and otherwise, that because there is an exemption from public records on that because of the sensitivity, that's why that is reported in a separate letter and just identified in our report at a very high level here. The 7th comment that we have relates to grant compliance. So again, going back to all of the fraud investigation transactions and all of those items, what we noted is when we did our actual grant testing, those items were not included in the amount that was subject to testing of those FEMA expenditures, the way the audit has to be performed. So we had no issues with regard to the actual grant expenditures that we tested. We did issue an unmodified opinion on the city's compliance with FEMA rules for those dollars. However, from an internal control standpoint, as we looked at the issues that there were on some of those original transactions that were being investigated and otherwise, we did note that that also impacted the internal control environment as it related to the city ensuring grant compliance. So that comment, again, very similar, but from the side of grant compliance and what the impact was there. So that covers the comments that we had with regard to the actual single audit, looking at your grant compliance. There, in addition to FEMA, we also looked at the city's 2 state revolving fund loans. While they are loans, they're treated as grants from a compliance testing standpoint because of the low interest rates that you get on those loans. The 4th report that we issue, there's a management letter required by the, sorry, I've got to fly. Required by the Florida Auditor General. We have to look at a series of items. First, we follow up on any comments in the prior year to note if they've been corrected or being repeated in the current year. Of the 5 comments last year, I think 4 of those were rolled into the current year comments. We also have to look at the city's financial condition. If there's any indicators that are met of basically a financial emergency, we would have to explicitly report that. There were none. We also go through what's called the financial condition assessment process, where we look at different key financial indicators of the city, compare those. Basically, there's a year-over-year trend internally, and there's also a benchmarking against other governments of similar size within the state. In that, the city rated as inconclusive. You can basically be favorable, unfavorable, or inconclusive. Normally, it's very hard to fall out of the inconclusive range. Given everything with the hurricane, you all are one where I said, well, maybe there will be enough negative trends that it would move you into the unfavorable. It doesn't. We would just have to basically report that and state that. But as we get into the numbers shortly, I think the city was really in such a strong financial position pre-hurricane that that's a huge part of what has it that you're still rating as, quote, inconclusive, as opposed to if you had been in a pretty tight position before, you would without a doubt be showing as unfavorable now. So we'll get to the numbers in a moment, but that is kind of the first piece that is evidence of, okay, despite all that, you still rate in the middle of the pack. The last report that we issue, we have to look at the city's compliance with state statutes over investment activity and investment policies. Here we did note that the city was in compliance with those specified statutes. So a pretty straightforward 1-page report here. And as I mentioned at the very back, there is a response from staff that outlines the current state of all of the findings that we did report in these letters. So to look at the numbers a little bit, the general fund, of course, is the primary operating fund of the city. Your fund balance is what we look at as your reserves. It's basically your assets minus your liabilities in the general fund. And you can see here that your total fund balance was just under $12 million, an increase from the prior year of about $3 million, largely due to some expenditures that didn't take place after the hurricane and otherwise. So kind of a very weird just situation where some of those dollars in there will ultimately probably move over to the disaster recovery fund to basically cover the city's portion on some of the expenditures once everything shakes out with regard to FEMA reimbursements and otherwise. But to walk through what that $12 million is made up of, there's 5 different classifications that those dollars could show up as. The first is non-spendable. This relates to inventories and prepaid items. The theory here is that you've already spent the cash to have supplies inventory on hand or prepaid for an expense that would be incurred in October. Therefore, that gets backed out because you can't use that cash on anything else. The restricted fund balance, about $4.7 million. This is monies that are externally restricted. You can only use them for the specified purpose from a legal basis, and you have no control over that. The 2 big items here relate to about $3 million is the balance in your infrastructure surtax dollars, and about 1.6 or so million relates to impact fees that are, of course, required for future capital growth and expansion. There were no items that met the committed classification. This would be very similar to restricted, but done so by the commission, generally via ordinance, so it's a much more formal action that would be done internally, and the key here is it would require the same action to undo that intent, but again, nothing met that criteria for reporting here. The assigned and unassigned now are your 2 buckets of really available unrestricted reserves. And assigned, for all intents and purposes, is basically earmarked. It's been identified for a specific use, but that could be changed at any point in time by the commission. The $639,000 that shows there, this just relates to, in your fiscal year 2020 budget, there was a line item saying that $600,000 was being appropriated to be available for spending in fiscal year 2020. Based on the accounting rules, that becomes assigned for next year's budget to be reported that way. But again, that is available money. It could be reassigned or utilized for any emergency or otherwise as needed. So we look at that $600,000 plus the $6.5 million of unassigned, which is essentially just the residual amount where there's absolutely no strings attached to that number. And to put it into perspective to try to quantify, okay, well, $7 million is great, but what does that mean? We combine those numbers to get to $7.1 million, and the benchmark we like to look at is how that compares to basically what your annual budget is or what your expenditures were for the same fiscal year. So your general fund expenditures were about $14.5 million in 2019, and as a percent, you're almost half. You're 49.2%. There's no rule of what this number has to be, but as far as, again, trying to benchmark what makes sense, the GFOA, which is the Government Finance Officers Association, really the predominant body for, or professional organization for government finance in the U.S. and Canada, they recommend that a general purpose tax-supported government have no less than 2 months in reserves. Looking at this measurement, there's generally a understanding that if you're coastal, it should be no less than 3 months. And I always, with all my clients, encourage that because normally we say, hurricanes are the big factor where, a big hurricane comes through, as you all obviously have been through. And, for Hurricane Michael, no level of reserves was going to be enough to just say, oh yeah, we're going to cover all the cash and be done with it. But having those reserves gives you that much more flexibility to get through, at least in the short term, and work through everything on a cash flow basis. So you guys are at a very strong position there. One of the other reasons now is COVID-19. Looking at the impact there's going to be an ongoing revenue impact for at least a couple months in terms of the sales taxes coming through to the city. And we've seen some cities that have a, say, 10% reserve, and they're struggling to just figure out what their cash flow is going to look like as they have to absorb those revenue hits. So again, the city at least is in a very strong position to get through the COVID-19 as we just see what is that impact going to look like in the long run beyond just these first few months of some of those state revenues taking a pretty sharp nosedive. So new this year, of course, is the Disaster Recovery Fund. As Hurricane Michael came through at the very start of fiscal year 2019, in the prior year audit, it was disclosed as a subsequent event. This audit is the first year that any of that activity is actually showing up in your financial statements. I've got a quick summary here of just the activity in the Disaster Recovery Fund. Your revenues from FEMA that were either reimbursed during the year as well as some that was received after year end but related to 2019 expenditures was about $15 million. Your expenditures out of this fund were about $33.5 million, and your insurance revenues were just under $10 million related to reimbursements and recoveries on the insurance side. Also on here, because these are governmental fund financial statements where it's really more of a cash basis financial statements, what you can see here is that second line from the bottom, we have debt proceeds. And that $34.3 million represents the $31.8 million bonds that were issued, as well as the $2.5 million line of credit that shows up on here as both there was a revenue from it, as well as the expenditure when that was repaid. So the way that we kind of look at it to say, okay, where do you stand in total with regard to the disaster recovery as of this point in time, again, because the thought process is that while this year the expenditures were a lot more than the inflows or revenues, as additional FEMA reimbursements get approved and slowly come in, those will outpace future expenditures, and that gap should narrow in future years. But in general terms, your ending fund balance of about $22.6 million is just about $9 million under that bond issuance. It's kind of the two easiest numbers to say, okay, what do you owe and what do you kind of have right now? So again, hopefully that will continue to narrow over future years, but that's kind of about where you are in terms of what you currently have in the fund versus what that debt issuance was. To quickly look at your other governmental funds that are presented in the financial statements, first there is the CRA, of course. This year there were pretty minimal expenditures in the CRA fund, of course, just after the hurricane, not as much done there. So that fund balance grew from about $260,000 or so to a little over $500,000, and that, of course, is restricted. We have to look at if those funds are spent in accordance with the underlying rules there. One change that we did have is the CRA was presented this year as a major fund. Basically what that means is it gets more attention and scrutiny as part of our audit process. The state auditor general requires that to be done if there's not a separate audit being performed. So it is one area that we, in effect, corrected from the prior year, as that's the way that CRA should be shown. With regard to your non-major funds, you have a debt service fund, about $300,000 in there of restricted fund balance. That relates to you basically move monies over there as part of your sinking funds, and then that fund actually makes the debt repayments on your existing notes and bonds payable. And then the disaster relief fund related to the separate nonprofit that was established because of the structure of that, that gets reported as part of the city's financial statements. Just a couple $1,000s in there in fund balance at the end of the year. The main reason there is as contributions come in, I know you all are approving those grants pretty quickly, so $165,000 of those $1,000 grants to citizens were passed through and paid out during fiscal year 2019. To look at your business type or utility funds a little bit, what we've got here, a very similar indicator is your unrestricted net position. Again, this is like the assigned and unassigned in your general fund. And what we look at here is really just trying to see, okay, from a trend standpoint, how are these funds performing year over year? The one caveat I always say looking at, say, your water and sewer fund is that the numbers only tell half the story. What's under the ground is really the rest of the story, and is there being is adequate capital planning being done and otherwise, because the infrastructure is really what counts with regards to the long-term health of those systems. What we see here is first on the stormwater and sanitation side, both of those small ticks upwards. Stormwater did come from a negative unrestricted balance back into the positive, so that's very good to see. But really the one I kind of took note of the most is your water and sewer funds. Both of those had a small tick downward, but when you looked at, again, the aftermath of Hurricane Michael with really no revenues coming in there, a substantial decline in revenues looking at fiscal 2019 versus 2018 revenues in that fund. Despite that major decrease in impact, those reserves both decreased about 10%. So nothing like a potential going off a cliff that you could have seen given the financial impact there. I know talking with staff that your customer counts are getting back up, and by the end of the fiscal year might be where you were 2 years ago. So in terms of how those funds have come through financially, in very strong position despite going through the hurricane and everything related to that in 2019. Pension funds, always a topic that we like to address. About 5 years ago, there was a new accounting standard that said that local governments must record the unfunded pension liabilities on your financial statements. For many cities of similar size to you all, these unfunded liabilities might be pushing the $15 million range, even $20 million. So when I first jumped in looking at the audit, looking at your actuary reports and otherwise, you guys were pretty much one of the best I've seen in terms of the overall health of those pension plans. Looking at first the percentage side on the bottom, you can see here, police and fire both over 90%. The general plan is the lowest funded, but still just barely under 90% funded. We've got plenty of cities that we work with that would just love to get one of their 3 plans over 80%. We see plenty of plans in the 60% funded range, 70% funded range. So that's one where there is a $2.7 million liability when it's aggregated that does show up on the city's financial statements. That number, in theory, did double from the prior year looking at that 3-year trend, but really that doubling as a percentage change in terms of the totality of the pension plans is pretty minimal. It just is double because it was such a small number to start with. It's like if your balance on something is 1, well, it's a lot easier to double the 2, but it's just a $1 change, looking at a much smaller scale. So that's one where, again, I like to highlight that because normally we like to acknowledge that, hey, there's this large liability for a lot of cities, but it's not going to become due and payable. So again, that $2.7 million is not going to be a check that the city's going to have to cut. At any point in time, it's really from a reporting standpoint, and the ongoing requirement of the city is that you're making your required contributions every year based on the actuary reports, and that has been done. So again, your pension plans, you're in a probably very enviable situation that many cities of similar size with the same types of plans would like to be in. Looking at your governmental activities, normally we don't really dive into this because in governmental financial statements, there's really 2 sets of numbers that you see. First, there's your fund level financial statements, and these match what you budget from and otherwise and are generally what we focus on because it's, again, tied to the budget. It's pretty much cash basis, but you're also required to come up with and present a set of financial statements that's called your government-wide statements that's intended to mimic what you would see in a business environment. So on these statements, for instance, you record all of your capital assets and your debt, where from a fund standpoint, it's just about when is cash coming in, when is cash going out. Where it's different from a business is a business, generally, if you have a small business, whatever assets you have, you could go try to resell those. Many of the capital assets of the city are roads, which show up as an asset, but they're really a liability because you've got to maintain them or the city will get sued for not maintaining roads. So it's not the same kind of, it makes sense from an accounting standpoint, but it is required to be presented. What I wanted to highlight here is first there's 3 buckets of what's called net position. Again, it's that same, just like fund balance, your reserves. And the capital reserves here, pretty similar to the prior year. This is all of those capital assets less any associated debt. The restricted, same rule as we had in the general fund. It's externally restricted for certain purposes. And then the unrestricted is the residual. So this is just kind of one, again, to look at the impact of where you are from the hurricane and disaster relief recovery activity. Is that unrestricted number is kind of the residual that could be used, again, as a benchmark That decreased about $6.5 million from the prior year. Really at a very high level, the combination there is that $9 million shortfall in the disaster recovery fund that we looked at, as well as about that $2.5 million increase in the general fund. So those two are kind of the main moving pieces that offset that. But again, that kind of says, okay, if you took some of those general fund dollars, moved it over to disaster recovery, where kind of approximately are you? And again, even though that number shows as a negative, there are some items like the pension liability that drop that down below where it is from more of a cash basis. And again, as we talked about, there are recoveries that the city should, can expect to see in future years as those revenues and recoveries begin outpacing the expenditure side and throughout the recovery process. So that really covers all of my comments. Thank you all again for your time, and if there's any other questions, I'm more than glad to entertain any.
Thank you very much for your presentation. Any of the commission have any questions that they'd like to present?
Mayor Pro Tem, I just have a comment I'd like to make, if I may.
Of course.
As you guys have stated, and I know you said this yesterday as well when we met with you guys individually, I'd like to congratulate our staff. I'd like to congratulate the people that we have working right now on this team, because as everyone knows, anytime you look outside your window or turn on the TV, it's crazy world out there, and yet we're keeping our financials afloat. We're not just staying afloat, we're above board. We're not bailing water, we're rowing the boat. So I'm thankful to our team, and I want them to know that. I'm thankful to our city manager for being responsible with everything that she does, and I want to thank you guys for coming out and basically bringing this to light for all of us and setting us at ease. So thank you for all you've done. That's all I have, Mayor.
Thank you. Anybody else?
Mayor Pro Tem, if I may.
Of course.
I'd too like to echo the sentiments of Commissioner Aldridge, because I met with you guys yesterday, and in meeting with you, I saw where you can just see where our city manager had started with the budget manager and the assistant finance director, and the monthly journals were not being kept up with, and now they are. And I know Ms. Kiki had a lot of work to do when she came in. And it's just evident that we're on the right path, and we're taking care of some stuff that didn't get taken care of before. And I'd like to compliment you, Ms. City Manager, for the transparency you've created in our finances, and it's greatly appreciated. Thank you.
Okay, I've just got a couple of things I want to ask. The first one, I guess, is in the city response to your findings. Do you agree with their responses and think that the things the city want to implement will rectify the issues that you have found?
Yeah, so we don't formally audit the response, say, okay, can we validate that everything has actually been done as it was said, but everything seems in line with what we've talked about. We feel that what's been outlined there is a good plan. So I mean, at this point, obviously we haven't audited 2020, but I would expect, the report will look substantially better next year, because some of them, again, are pretty quick fixes, so we can basically say, okay, well, if you're doing what you said you did, then you've already addressed this issue. So I would definitely expect that to be the case, and did not have any issues with any of the plans or anything being insufficient or anything like that.
Thank you. A couple of things I just want to highlight from our meeting, and correct me on any of these if the statements I'm making are incorrect. That you were exceptionally happy with the way the health of our pension funds at the moment, correct? Okay. That you were very happy with the staff responsiveness to your questions and concerns, and you were impressed how they engaged you through the audit process. Yeah, kind of starting with just the high level of the accomplishment to be done. I think at face value, it's okay, well, it's a week before the deadline, but looking at the circumstances, the turnover, and otherwise, like I said, I never would have expected being done on time. You factor that in along with just some of the questions that we've gotten from Kiki, and otherwise looking at processes. We've kind of joked internally where, okay, we don't normally get those questions. It's great to see that staff is thinking about, well, hey, is this
is this really the right control? Does this accomplish it? We're kind of worried about, we want to change this, but there's still this concern. So yeah, there's been lots of good dialogue from that standpoint.
Very good, very good. And then lastly, you hit on the our reserves, that we've got 6 months in reserves basically, and that's put us in a pretty strong position at the moment, correct?
Yep.
Okay.
Yeah, and some of that, as I mentioned, will ultimately become part of really the city's match or portion of those FEMA dollars. So when you look at COVID-19, the ongoing recovery, that just, again, has the city set up as strongly as possible to get through that. Because depending what your ultimate share is, it's one where it's going to be a couple of years as everything gets wrapped up. Well, are you in good enough shape that you've got the funds internally to kind of cover that? Are you going to have to convert anything to a more long-term borrowing because there's just this net deficit? So that the stronger you are, the stronger you'll be able to come out of it.
Okay, thank you. So my final statement before we open it to the public is I just want to, again, reiterate thank you to the staff. Thank you to Kiki and the city manager. Y'all did an amazing job with this. Obviously, as our auditors have explained, so thank you very much, and thank you, city manager, for putting the staff in place to take care of the problems. Do the public have any questions that they would like to address? Yes, sir, Mr. Walker. Mr. Walker, if you would take the microphone for the public, please, sir.
The last slide there, page 12, it said restricted. Could you explain what that meant on the government, last slide? Number 12, page 12. Correction, unrestricted, as a minus 4,042,481. Could you explain that?
Yeah, so what this is looking at is when we look at your government activities, basically all of your assets minus your liabilities from a full accrual standpoint, looking at all of the roads, buildings, everything else that's related to your general fund. When we take all those numbers, as I kind of mentioned, we back out everything related to capital and debt, and then we back out everything that is restricted. So the restricted side is when it's got those legal restrictions like we talked about in the general fund, the surtax dollars, and the impact fees. And then the unrestricted, in effect, is the residual. So there's no exact number to say, here's what makes up your unrestricted. It's really once you look at, okay, what's your net in total, and then you have to back out those other categories first. So more or less what the unrestricted relates to is largely that $9 million in the disaster recovery fund where you have a $31 million debt, but you only have $22 million of those funds still on hand. So that alone basically generates a negative $9 million impact looking at that shortfall. But again, hopefully a lot of that will be recovered in future years.
Not a question, but you mentioned in respect to Commissioner there, he said this was previous 2019, 2020 budget. That's what this is. That was your audit. Okay. It was 18-19, okay. Entered into previous to Ms. Ticky there taking over. Nobody wants to throw blame anywhere. However, the setup then in 2018, 2019 was under another budget and fiscal officer or CFO. That's correct. Is that the assumption then? He was the one that set up the program for this?
Yes, sir. Yeah, I mean, the budget for this fiscal year would have been adopted in the summer of 2018. Right. So yes, there was, different city manager, different finance director, and there's been lots of turnover. Thank you. No problem.
If there's nothing else, we'll conclude this workshop, but thank you again for your tireless work and presenting this to us. Thank you.
Thank you.
Thank you.